What's good, Temple? I just did a 30-minute video that did not upload due to the technical difficulties I was having with my internet. So now these technical difficulties have seemed to have passed. I will go ahead and try to recreate a little bit of what I went over that past half hour. I'll also try and make it a little bit quicker. So, what I'm going to do today is a little brief video about some of the life insurance differences in policies and actually let you see firsthand what an agencies, when they are actually putting together a quote, which we call illustration, for you. So with that being said, here's the program that I use. It's called OneFlex Web. And here is one of the policies, or a illustration that I created. But before I do that, I'm going to go back to the beginning and hope that my internet is still not bugging. And it is still bugging. This is getting frustrating. All right, you know what? Oh, never mind. So, here we go. So, again, this is OneFlex Web. This is only for insurance agents, and this is literally my personal portal. This shows the companies that I represent or write the most business for. So if you'll see over here, there's Bright House Financial, which is MetLife. There's Security Mutual, which is MCU Bank here in New York. There's Prudential, there's Mutual of Omaha, and there's Nationwide. So the last one I did was a Mutual of Omaha illustration. So we're going to go here into illustrations. And my internet is moving at a lightning speed today. If you can see on the side here, these are my clients. I'm not going to pull too much of that up. I'm going to start a new case. Okay. We'll start with Bright House Financial, MetLife. And we will do their guaranteed level term. So we're going to create a client. And I'm just going to show you guys some of the differences in the insurance policies here, or possibilities. Okay. So one of our main issues is distribution. They talk to a lot of large retailers and beauty buyers. They absolutely. So you'll always hear them ask you your name, age, date of birth, and when the last time you smoked a cigarette. So there are, I'm sure you've seen the commercial where it's like, yeah, you know, we got a 44-year-old man, $1 million life insurance policy for $14 a month. And there's a few different ways they did that. So here, as you see, it says risk class. That's why no one can ever tell you what the price of a life insurance policy is, or when people say, well, what's the average price that people pay? There really is no average. And the reason there really is no average is because I wear a different size shoe than you wear. And you wear a different size shoe than your brother wears. And your brother wears a different size shoe than your uncle. Okay? So if you ask someone to make you a custom shoe, he ain't going to charge you all the same price because there's different material. So if you look here, it's Elite Plus Non-Smoker, Elite Non-Smoker. Usually they're Elite Plus Non-Smoker. Let me tell you, the 100% guaranteed truth is nobody is going to get this rating because nobody has that health. This means you ain't never had a paper cut. Generally, what people will get is standard or preferred. Preferred is if you're in good health, really good health, and standard is if you're a regular Joe. Okay, most of the time when we quote you, we will quote you with Elite Plus Non-Smoker. That pulls you in and you're like, yeah, $14 a month. Then when you go through the exam, you're actually standard. So for this instance, I'm going to put standard. Now, I am a smoker, so I'm going to show you all the difference between a non-smoker and a smoker. So right here, we're going to start with a preferred standard non-smoker. We're going to take a look at the policy info. We're going to put in the face value. And we're going to solve for the premium. I'm going to go for $1 million policy. And we're going to pay it on a monthly basis. I do want to compare plans. We're going to do, why is it a term plan of 20? And I can't compare plans on that, okay. Oh, that's because it's a guaranteed level term. Okay. So now we're going to look at policy riders. Every great agent will definitely automatically almost should put this on your policy, but you should know what it is and you should know what you're paying for. Again, this is why research on your own is great, but a product or service like this, you won't know what you're looking for unless you're an agent yourself. So the first thing you always want to make sure that your policy has is disability waiver of premium. What this means is if you get sick or injured and are unable to work, and that's stated by a doctor, the insurance company will pay for your policy. Okay, the accelerated death benefit. That's ironic that MetLife makes it a rider on a policy, but with the accelerated death benefit, is something that's pulled into all policies. Let's say you've had your policy for a number of years and you get a terminal illness. Let's say you've had your policy and now you've got cancer and the doctor says you've got 6 months to live. They will accelerate your death benefit, allowing you to extract up to 90% of the monies that are in that policy for use while you are alive. Now, riders are also, if you've ever been, for example, in the car business, additional bells and whistles. These bells and whistles are like aftermarket. They come at a cost. So every rider does increase the cost of your policy. But this is agent info. This is me. So, and we're not going to go to a concept. We're going to calculate it. And then I'm going to let you see the illustration. So what it's doing right now is it is communicating with the insurance company to give me an approximate price of a person who's in this particular condition. Okay, so here we go. Here goes the PDF. All right. So this is a 20-year guaranteed level term. And the base face amount is $1 million. So monthly, I would be paying $90.81 a month for a 20-year term life insurance policy. Okay. Now, I always like to look at the nitty-gritty. So, a term policy is like renting a house, whereas a permanent policy is like buying a house and owning the mortgage. Or owning the house and paying the mortgage, sorry. But, if you'll notice here with this term policy, it's the least amount of dollars for the most amount of protection. $1,090 a year, and you're getting $1 million of insurance. Now, you're not going to tell me that any other vehicle has the leverage such as this. No investment, no bank, no fix and flip real estate, nothing is going to have that much leverage where you give me basically $1,100, and in the event that the event happens, your death, I'm going to give you or your family $1 million. So, over the course of the first 5 years, you spent $5,500. I'm going to give you $1 million. Over 10 years, you spent $11,000. I'm going to give you $1 million. Now, here's the trick with term policies, right? So, like we said, so you're locked into that great price, right, for 20 years, right? But then it's renewable. But here's year 21, right? So then at year 21, instead of paying $1,090, because it's a term policy and my term has ended, you see that price jacked up. I'm paying in 1 year what I almost paid in 15 years for that same $1 million. Okay? Now, this is with all the riders and everything. Now, I'm going to go back. I'm going to edit it. Okay? So we're going to go back into here. And we're going to show you the detriments of being a smoker. So we're going to go standard smoker. Okay? And then we're going to calculate. Everything else remains the same except for now it's a smoker. It's queued. Why isn't it submitting? Submit. Alright, I don't know. I guess they don't want to hear from me right now. Every time I do this, it's actually communicating with MetLife for them to give me a price. Which, again, Bright House Financial purchased MetLife. So MetLife, now everything that you have from MetLife, if you do have it, will come back as Bright House Financial. Your motto is work hard, play harder. Help me save the day. And it's calculating. Complete. Here we go. I'd love to show you some samples. And can Maury get in the hot tub with your friend? Of course. The more the merrier. It's a party. Go, Lori, and I'll explain how it works, Steve. The weighted extension gives it a center of gravity. So no matter if it bobs left or right, or if it rides over a wave, it always comes back to center. Again, bear with me. I don't know why, but today my internet decided to act a fool and go ridiculously slow. So again, you're going to see, boom, life insurance policy proposal, prepared by Alonzo Hall, so, remember, like I showed you, for a non-smoker, it was $91 a month. This same policy, everything else is exactly the same, except I changed it from non-smoker to smoker. And the price is damn near literally tripled. It now went from $90.81 a month to $254.61 a month. Again, if we look at the amount of years, you're going to pay $3,055 a year, but you're still leveraging dollars because you're going to get $1 million should anything happen. Now, let's go ahead and flip to year 20, where you no longer pay $30.55. Year 21, the policy will continue, but now you're paying nearly $30,000 a year. So that is a term policy. That's what that looks like. Again, there are different policies with different companies, with different riders and different things. The next thing I will show you guys is a permanent policy or a whole life policy. They've got the universal life. So let's go. Oh, they got a new UL. I have to study this one. They have a new universal life insurance policy that they created here. And this one is awesome. The reason I like universal life insurance or any type of a permanent life insurance policy is because of the cash value that you can accumulate and the different ways that you can play with it. So I remember speaking with Ahmad and he was asking about disbursements. So this is how you would set up the disbursements. Well, this is how I or your agent would set up the disbursements on if it was a participating policy. That I'll have to make another video for, but the people who were on the phone conversation with me know about what a participating policy is. So if you'll see that it'll ask for the disbursements, I mentioned to the gentleman, generally they are annual. Some companies do quarterly, some don't. Apparently now with this new 2017 policy that they have, MetLife or Bright House Financial only does annual disbursements, but we're not going to do that with disbursements. Now, when you're looking at a permanent policy, you're going to look at a bunch of different options, and all of this I'm going to go over later when I make another video going deeper into it. One of the other questions that someone had for me was, what is the maximum? I need to change that state from Alabama to New York, only because I'm currently in New York. I'm also licensed in Connecticut, so I can show you, oh, this product is not available in New York. Ah, okay. I also am licensed in Connecticut, so I'll do that, Connecticut. So we can also do that there. So we'll solve for boom, boom, boom. Now, this one again is a solve for the face amount. So this policy, the minimum amount you can get is $5,000. The maximum amount on this policy is $5 million. Okay, but again, each type of a policy is going to have a different amount that is your maximum. So this one's maximum is $5,000. Again, as you'll see, it says Premier Accumulator Universal Life 2017. I am used to the regular Premier Accumulator Universal Life. Every 2 years, the insurance companies change their stuff, which is again why I said it's important to sit with an agent and have a review. And the reason being is because, let's just calculate this. I'm not even going to go through all the riders and everything. I'm just going to calculate it because I want you guys to see what you need to look for when you sit down with myself or another agent and know what it is that you're looking at. Because most people don't know what it is that they're looking at, and a closed mouth don't get fed. So if you don't tell that insurance agent, hey, look, I'm looking to buy a house and have my life insurance pay my house off in 20 years, then, that's what happens. Now, if you'll notice here, this says this report is for agent use only. These values are not guaranteed, and actual results may be greater or less than those shown. And then it says these values are not valid unless accompanied or preceded by a source ledger for each policy illustrated. Again, that's internal stuff, but the reason I post this is because, like I told you, you may or may not know, a couple years ago I got sued for $1 million, and the woman won. She won $410,000 from me, which I don't have. But that's why I work. So, as this loads, there are some important things that we're going to look at. So yes, you're looking at, well, it costs me how much a year or how much a month, because that's very important. Now, I kept the same face amount of $1 million because I want to show you the difference between, that's funny, life insurance as an asset. That's not what I did. That's actually the company itself that said that, and this is one of the things I've been preaching for years. I guess their marketing team heard me. So if you'll see Bright House, this is a bunch of disclaimers because they don't want you to sue them anyway. So they'll say cash value life insurance can leverage premium payments into a sizable death benefit, provide a way to accumulate funds through its cash value. This money can be used for college, emergencies, or during retirement without tax implications, assuming the policy is properly structured. As discussed below, it can also transfer wealth with an income tax-free death benefit. So we're not going to read through all these disclaimers and all of this. What I want to get to is the meat and potatoes really quickly. So annually, this policy cost me $37,500. Right? And nearly 20 grand as a and it's only with the option A level death benefit. Okay, but as a monthly bank draft of $20,277. So this is a single premium type of policy. When I'm scrolling down here, so this is what you want to look at, and this is what every agent should be showing you during your life insurance valuation. Okay, which is the policy values ledger. Okay, this one, this is valuing, these values assume that there's a guaranteed 2% interest rate. So I have been speaking to people, and every state is different. New York State is a 3% interest. Connecticut happens to be a 2% interest. And this is a very new policy, so I'm not 100% familiar with it. I have to do a little training on it. I know there are other universal life. Like I said, I showed you this one is 2017. So let's take a look at year one. Okay, so year one, and again, this is for me, for Alonzo Hall, age 33 at the time. After year one, the first year I paid into it, $37,502. My cash value available is $28,250. My cash surrender value. This is what you want to look at when you're looking at those life insurance policies. My cash surrender value is actually, this is a really good one, but that's because this is like maximizing the funding. So I have to change a few things because Nobody would actually pay this much into a policy or can afford that just for $1 million policy. But you already see the difference in leverage, where it was costing you $3,500 a year for $1 million of term. It's costing you $37,000 a year for $1 million of whole life. But if you cancel that term policy, that's it, your money's gone. If you cancel this whole life policy, you're still going to get some money back with what's called your cash surrender value. There are penalties for surrendering the policy, which is why you're only going to get 28.2. And as you go through certain years, basically I set this up like a permanent 20-year term. If you'll notice, the annualized premium goes down. So this is what we call flex pay. So I set it up so I only have to pay for 20 years. And at the 20th year, I'm only paying $3,700, but I have $284,000 worth of cash value built up in there. Now, this would be a scenario where, let's say you purchased a house and you got a bunch of money left over and you want to pay off your house early, so you're going to pay a bunch of money into your life insurance, and then you can literally whip out what's called an amortization schedule and figure out what that will be, and then you'd pull out the money. If you'll see here, year 20, I'm paying $0 in, but my cash value is decreasing because now the policy is paying for itself, right? But the ill part is here at year 20 is where I would cancel the policy because I'd get all of this money back. This, again, is a new policy, so this kind of took me off guard. I will do another video and show some more concepts and ways that things can happen. Another thing, please, if you did bother to watch the whole video, I need your input. If I don't get your input, then I'm not going to do these videos because it's falling on deaf ears. So if you have a question, concern, or comment, I don't care if it's 3 weeks later, type the question or DM me, or most of the time I put my cell phone number up there. Call me or shoot me an email and say, hey, listen, I think this is a stupid question, but the only stupid question is the one that's not asked. So now that you see a little bit, I'm going to close this out now. That's one of the companies. If I go back, I can actually change the product. Let's change product. And I can actually, I can actually change the company. So I can go Bright House Financial, which is MetLife. I can go Mutual of Omaha, Nationwide, Prudential, or Security Mutual, which is MCU. So, you know, I'll go into making a bunch of different videos because each company has different products. So I did have a person ask me, well, what's the best company to, you know, go to? And that really takes me giving you a consultation. The consultation can take anywhere from 30 minutes to 2 hours. But I think it's worthwhile to spend 2 hours with someone. As you'll see, there's a bunch of different products from each company. Bright House has now limited their product offering. Mutual of Omaha has a few products. Nationwide has a bunch of products, right? Prudential has a bunch of products, okay? Security Mutual, MCU, has a few products. So, let's just see what we got with Prudential. Let's go Prudential, and let's do Term Elite 10. So, each product and each company is going to have different qualifications, etc., etc. But with that being said, I am going to go ahead and end this video. Please watch it. Please give me some feedback. Hopefully this helped. If not, tell me, yo, your video sucked. It didn't answer any of the questions I had. Ask me specific questions so I can answer those questions. With that being said, Black Lives Matter. One love. I'm out.